Welcome back, Middle Age Grind. And today is the second part in the series on insurance. And I wanted to cover homeowners insurance today. And what are some of the big topics, and regardless of where you live in America, or I don't know how it is around the world. I know I have some international viewers, but wanted to go over some of the things that I see that people either may not know or but should know. And the first thing I want to talk about is replacement cost versus actual cash value. Very important. What does that mean? And I'm going to go over from a State Farm point of view, but it's probably similar at any insurance company. We come up with an exactware every year based on the particulars of your home, when it was built, the size, the construction, the roof type, etc., on what the replacement cost is to replace that home in today's dollars. And every year your policy should be going up a little bit to kind of mirror inflation, so to speak. And a lot of people don't know if they have a replacement cost policy or an actual cash value. Let me give you the example here. Let's say your house, is $250,000 to replace. It's 15 years old, kind of thing. So your roof, I'm gonna use the roof as an example for this. So in a claim situation, let's say your roof in that scenario is $20,000 to replace, and your deductible is $2,000. In a replacement cost policy, you're going to be responsible for your $2,000 deductible, and we're going to pay the difference, which is $18,000, to put you on a new roof. In an actual cash value policy, that same scenario, your roof costs $20,000 to replace, you have a $2,000 deductible, they're going to depreciate that roof 15 years. So they might say that roof was only worth $10,000 minus your $2,000 deductible. You're going to get $8,000 to replace a $20,000 roof. And that goes to any type of claim with your homeowner's policy. That's just a roof example. Could be a total loss, could be a kitchen fire, could be whatever. It's important to know if you have replacement cost versus actual cash value. The next part is deductibles. Living down here in the South, and we're in hurricane territory, we do have separate hurricane deductibles. Some policies have separate wind and hail deductibles. Typically, hurricane deductible is going to be 2% or 5% of the dwelling. You got to know that, guys, going in, because that can be a big difference on how much you're responsible. Same thing with wind and hail. Normally, if you have a wind and hail separate deductible, it's going to be higher than your normal regular deductible for non-wind and hail events. Got to know those deductibles. Roofs are becoming big thing, and then I know down here we're big on the fortified roof discounts. That's going to be built to certain specifics to combat against high wind events and hurricane situations. I know when I was an agent and when I lived in Oklahoma, we had higher discounts for impact resistant roofs. That's going to be kind of in the hail section, which is kind of the middle America. You might look at, when you replace your roof, what discounts your company gives for having either impact resistant or fortified roofs. That's going to be, I know in Louisiana, as an example, we have, it's bronze, silver, and gold. That's the classifications. There's different levels of certifications for those fortified roofs. And looking into that, we're offering, I believe it's up to 50% discount for the gold certified roof. I mean, that is huge. And I think for the bronze, where it's 30 or 35%, and like I say, if you're going to replace your roof anyway, and it's not that much more from what I understand to get these fortified certifications, It's basically taping down seams and having nails put in a pattern 4 inches on the underlayment that gives it that fortification, that base level standard. It might save you thousands of dollars a year, and you pay for that going forward, and it helps with resale value of your home. If you have a fortified roof and you can get insurance easier, that's going to help the value of your home. Some endorsements I want to talk about that we offer separately, and I don't know what every company's different, but we do. Backup of sewer and drain is an endorsement. We typically put that on most of our policies when we're quoting. That's if your sewer backs up in your house. If you don't have the endorsement, there's no coverage. Most of our customers do, if not all. Another one that's on there, and it's not that expensive, and I know down here it's not a huge issue, but you might check where you live. Earthquake endorsement. I have it on my policy. It is not that much annually, the premium. I don't think it's $50 a year. It may be more where you live, but a lot of times if there's earthquake, it's a separate endorsement. So you might check with your carrier with that. This is something we had a call yesterday, a district call, and they talked a lot about these new aerial drone inspections. This goes into new business and existing business. And if you go on Google Maps, not that that's what they're using, but they were showing us an example of the company they use. That's what it kind of looks like to me when you can satellite zoom in. Basically, they can tell a lot what's going on with these inspections, not only with the roof and the condition, even though someone putting their eyes on it's probably going to be best, but like if you have a lot of yard debris and a lot of junk in there, which insurance companies don't like, liability issues, not only someone tripping and falling, think about a high wind event, you got a bunch of junk in your yard, projectiles, claims, that kind of looking at. They kind of getting a little bit more efficient on inspecting these. So, when you're either getting quotes or renewal time, just remember, insurance companies don't like limbs of trees laying on the roofs. That just goes into damage, kind of thing. So just keep that in mind. Another thing is, and this is big down here, I don't know how it is in the rest of the country, the strength of the company. And State Farm is the largest property and casualty provider as far as, assets, that kind of thing. And I feel confident being with this company. But let me give you an example. When I moved in my home in 2011, I live in Covington, Louisiana. You could check where that's at. That's north of Lake Pontchartrain. At the time, State Farm was not writing homeowners there. We're not now either. And they don't care if I'm an agent. There's no exceptions. We don't get any special treatment. For the first 10 months, I did not have State Farm. I had a company, I believe it was called ASI at the time. And my annual premium in 2011 was, I think it was around $1,300. And then about 10 months later, this was in the summer of 2012, State Farm opened up my area to anyone. And I left that company, I went to State Farm. I think I was paying $1,700. It was more. But I just knew, I said, I want to be with my company, that kind of thing. Let me fast forward to now in Louisiana and what's happened over the past, since I'd say Ida, which was 21. We had 3 hurricanes in 2 years in this state. Billions of dollars paid out. And I'll share with you my premium right now with State Farm is $2,800. Okay. Say that's high or that's low, that's whatever. Let me give you an example. That company, that first one I told you I'm with, ASI, they left Louisiana long time ago, 3 years ago. Don't have that anymore. So if you had that company, you had to get other coverage. Guy right down the corner from me called me 2 months ago and wanted to get a quote from me from State Farm. Unfortunately, we're in a moratorium in that area again. I can't write it. He had ASI too. had to go with another company, was dropped, they went bankrupt. His carrier, which I believe he said was Progressive, now we have the same house, same value, everything, $8,800 a year. Wow. And I can tell you the average premium in my neighborhood, talking to people, is probably around the $6,000 to $7,000 annual premium range. And the people who have State Farm are generally paying what I'm paying for the same house. And that just goes to show you, we were charging the proper premium way back when. Yeah, we were higher than everybody else. But even in these midst of these 3 hurricanes, we have not really seen a rate increase since then. 2% per year, basically, that's not even keeping up with inflation, but that's generally what we've seen. Not these astronomical, stupid premiums that companies, look, what happened after those 3 storms, half of the companies either went bankrupt or left the state. So you're left with a few, and we, from what I understand, in Louisiana, we have over 50% of the market. And corporate, as an agent, I want to write everybody, and corporate says, okay, we got enough going on here, kind of thing. But that just goes to show you, don't always run to the cheapest premium wherever you're at, because things happen, guys, and there's Tornado Alley, there's fires, there's hurricanes, whatever. A lot of times these little bitty cheap companies, once they start getting some claims, they become insolvent. And then we have an insurer of last resort in Louisiana. It's called Citizens, and it's a state-run insurance company. That's basically in place to provide insurance for people that can't get it on the coast through normal means, but it has to be 10% higher than anybody else, because the state doesn't want to be in the insurance business. But they have to provide an option for people who have mortgages and need to have it. Because if they didn't, you would see the values of homes drop tremendously. But these are some of the things I don't know if people know about, but I think is important. We'll continue this series. The next one will be on life insurance, and that's the one that's kind of near and dear to me. But homeowners is something I want to go over. It's just stuff that people might not know, and I think is useful. And with that said, we'll see you next time on the Middle Age Grind.